Hey everybody, Matt Johnston here with yet another COVID-19 legal update. This week has been crazy busy, and today, April 3rd, is the first day that the Paycheck Protection Program is available through the Small Business Association, Small Business Administration, the SBA lender programs that are available. And so this is the first day that you can start applying for those loans. So there is a lot of questions that are flying around, all kinds of interesting rumors. I'm not going to address the rumors. I'm going to address the SBA's regulatory interim rule that they have put out regarding the Paycheck Protection Program, or the PPP. I got to come up with a better, we're just going to call it the program for this purposes here. Otherwise, I'm just going to keep tripping over my tongue. We're going to be talking about some specific legal things here, so just a quick reminder that I am a lawyer, but I am not necessarily your lawyer. So although we're going to be talking about some legal stuff here, doesn't mean that this information is privileged nor specifically applicable to your particular situation. So now that I've covered my butt, here we're going to go into what the information is. If you want to speak to us, we are offering pay as you can consultations, 15 minutes. You can schedule one of those through the scheduling link that's down below. And I wouldn't mind it if you hit the little subscribe button that's going to appear at the end of this video or down below as well. Just because I like to know that people are watching these things. And it's just not for my own edification. Anywho, let's move on to our regulations. The Paycheck Protection Program, the program is being offered. There's $349 billion worth of loans that are going to be made available by, or loan guarantees specifically, going to be made by the federal government to small businesses. So what is a small business and who is eligible? Eligible borrowers include those people who have 500 or fewer employees, provided that those employees have their principal place of residence here in the United States. It can be a small business concern, as that's defined by the statute. It can also be a tax-exempt 501c3 organization. So those organizations are also eligible for these loans. The SBA is not making any distinguishment between those. You also have to have been in operation prior to February 15th, 2020 and had either employees for whom you paid compensation or independent contractors that you paid under a 1099. So people who operate a sole proprietorship, now I'm not talking about a single member LLC, I'm talking about a sole proprietorship without a legal entity around it. Those folks are also eligible, as well as independent contractors and people like that. Okay, so there are some ineligibility requirements. I'm not going to talk about those. Basically, if you're a criminal, you're going to have a problem, or if you've defaulted on an SBA loan anytime in the past 7 years that caused the federal government to lose money, then you may be eligible. But let's assume you are eligible. What is the maximum amount of money that you can borrow? The maximum amount is the lesser of $10 million, or an amount that you calculate using the payroll-based formula that's in the Act. And we're going to talk about that in a second. So that's the maximum amount that you can borrow. And you are borrowing, unless you're getting the $10 million, you're going to be borrowing 250% of your average monthly payroll costs. So how is that determined? All right. So let's just take a very simple example. Your annual payroll is $120,000. Your average monthly payroll is then $10,000. You multiply that by 2.5, your maximum loan amount is $25,000. There are some costs that are going to be exempted. For example, people who get paid more than $100,000 per year, anything over $100,000 isn't calculated in that. So the SBA gave us a nice little example for that. So the example is some employees make more than $100,000. The annual payroll is $1.5 million. You subtract the compensation of amounts in excess of that $100,000. In their example, they came to that with $300,000. So now the annual payroll is $1.2 million. So the average monthly qualifying payroll is $100,000. You multiply that by 2.5 and your maximum loan amount is $250,000. There's a few other examples that they provide. So it's kind of nice. The department or the Small Business Administration is much more user-friendly than, say, I don't know, the Department of Labor, which I had spent yesterday reading these regulations. So what qualifies as a payroll cost? Now I'm going to read this direct from the regulation, and then we'll talk a little bit. Payroll cost consists of compensation to employees whose principal place of residence is the United States, in the form of salary, wages, commissions, or similar compensation, cash tips or the equivalent, based on employer records of past tips, or in the absence of such records, a reasonable good faith employer estimate of such tips, payment for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums and retirement, payment of state and local taxes assessed on compensation of employees, and for an independent contractor or sole proprietor, wage, commissions, income, or net earnings from self-employment or similar compensation. So let's break that down a little bit here. So payroll cost consists of compensation to employees. Okay, again, they have to be residents of the United States. Their principal residence is here. And it's pretty much all of their cash contribution, whatever form that may take. So salary, wages, if you have tipped employees, that counts as well. Commissions, things like that. If you have made payments for paid leave, so whatever your paid leave looks like, whether that is vacation or regular PTO or even paid FMLA, that counts in here. If you've had to pay benefits to people for their separation or dismissal from the employment, so that is severance pay. Certain employee benefits, particularly group health coverage, so that counts. Other premiums, it says including insurance premiums. I'm not sure if that would include things like disability or life insurance. That's not clear here in these regulations. And any employer contributions to retirement accounts, so employer matching for 401ks or simple IRAs or something like that, those are count, and your state and local payroll taxes, but not your federal payroll taxes. So your federal payroll taxes aren't included in this number, but your state and local payroll taxes are included in that number. All right, that's for businesses with employees. If you are an independent contractor or sole proprietor, your payroll expenses are wages, commission, income, or net earnings from your business. So there's one for employers and one for self-employed. Now, one of the questions that has been coming up is, what about shared employees? So let's say a company hires, say, 15, 20, 40, 100 employees from a temporary agency or a leased employee type situation. The question is whether or not those are counted within the payroll costs or not. And frankly, the current regulations don't cover that question. So I think that the SBA is going to have that question. It's going to turn on whether or not the employees are paid directly by the employer or whether the employer pays the temporary agency who then pays the employees. And I think that's going to be the key question that's going to have to be answered. And right now, there is no guidance on that, at least as far as I can see in these regulations. Okay. So what happens with the loan? So if the loan is made and the proceeds of the loan or the money for the loan is used for the qualified purposes, then that loan will be forgiven. Okay. If it's not forgiven, it's a 1% interest rate. It matures in a couple of years, and there's some other things that that move on from there. You can only apply for one of the program loans, and it is a first come, first served basis. So there's going to be a crazy amount of applications coming in the next few days, yeah, it's going to be kind of ugly. So here's what the SBA talks about forgiveness. The amount of loan forgiveness can be up to the full principal amount of the loan and any accrued interest. Okay. So the borrower will not be responsible for any loan payment if it is used for forgivable purposes. So, Matt, what are forgivable purposes? Okay, that's a fine question. And let me scroll down here. The proceeds of a program loan can be used for payroll costs, as we talked about, costs related to the continuation of group healthcare benefits, okay, mortgage interest payments, okay, not principal payments, but interest payments, and certainly not mortgage prepayments. You can use it for rent payments, utility payments, or interest payments on other debt obligations, and also to pay other specific kind of SBA loan, the economic injury loan that's also been made available. So if you use the money for those purposes, then it's going to be forgiven. You do have to have documentation. I hate to tell you guys, you're going to have some documentation. Your bank is going to have a different set of documentation, but you should be working within that realm. If the funds are misused, okay, for unauthorized purposes, okay, the SBA will direct you to repay those amounts. So if you use it to make a mortgage principal payment, the SBA is not going to forgive that part of the loan. Okay, if one of the business owners uses it for unauthorized purposes, the SBA can go against that particular person. It can go against that business owner. It can seek that personal payment guarantee. Okay, there is a whole series of certifications that's going to have to be made as part of the application process. The application is currently available now to start with the SBA side of things, but you are going to have to work with your lending institution and in order to get those particular loans started and put in place. Now, there's a whole bunch of rumors that have been going around that banks are starting to require information above and beyond what the the SBA was saying. There's also a rumor that I saw that the banks are refusing to grant the loans to some borrowers. I don't have any specific information on that. You are going to have to work with your bank. You're going to be in a situation where they're going to be looking at a variety of factors. But these are loans that are supposed to be made available to all small businesses, and if they're used for the authorized purposes, they'll be forgiven and the government will repay the bank. At least that's how it's supposed to work. I haven't talked about the lender regulations that are also available. The nice thing about the SBA regulations, they're pretty easy to read. They're only 31 pages long, and half of that is for lenders. So the link to those regulations are going to be down below. In the meantime, if you have any questions, please don't hesitate to schedule a call with us, and we hope that you will continue to wash your hands, practice a little social distancing, keep your chin up. We're going to get through this, I promise. In the meantime, we'll talk to you later. Bye-bye.